All right, guys, so in my last video, I walked through the differences between what a CPA does, what a fractional CFO does, and what a bookkeeper does. I'm gonna focus on taxes in this video. So it's almost the end of the year. The time has come, right? What are you doing for your taxes to reduce your liability before the end of the year? I'm gonna walk through 10 different strategies that you can actually take advantage of to make sure that you're reducing the amount of tax liability that you're gonna have and the amount of taxes you're gonna pay come April, okay? Let's dive in. All right, guys, so here are the 10 best end of year tax strategies that every business owner really needs to know for 2023. I'm going to shift this over and just go full screen and walk you through each of the 10. All right, so the first one is accelerate your expenses. At the end of the year, if you can essentially deploy capital to do the things that you were planning to do sometime maybe earlier in the new year, bringing on that coach, that consultant, anything project-based, or if you have suppliers that are going to invoice you any big purchase that you can make, especially for like inventory, this is a very good way to start writing down your income. Because let's say you own an e-com brand and you're just about ready to purchase some more inventory. If you do that in December, that straight expense just goes right to cost of goods sold. That will write down your income by whatever the cost of that inventory is. Same exact thing goes for a B2B business. If you can write down expenses towards the end of the year, that limits the amount of income that will be taxable for taxes come April of the following year. This is a great first way to do this, and you should definitely take advantage of it. All right, so number 2, you've got contribute to retirement plans, SEP IRAs, solo 401ks, Roth IRAs. All of these things are different vehicles that you can leverage to start reducing the amount of income that you'll be taxed on. So I don't really hear a lot of people talking about this, especially small business owners, a lot of online, agency owners. You guys have LLCs, you might have some S corps. You can set up things like solo 401ks to be able to make contributions to those accounts and essentially save all of those deductions, all of those contributions that you put towards that 401k. You're going to put it in an account. It's going to get invested. You're not going to get taxed on it now. You'll get taxed on it later. The difference with something like a Roth is a Roth IRA, you get taxed now, but it grows and accrues in your ROI when you put that in investments. Over time, that's growing tax-free. So you get taxed now, and when you pull it out later, it's tax-free. The difference there is with a Roth IRA, the whole point is if you expect to be in a higher tax bracket later on in life, this is why it's beneficial for you to invest in it now when you're getting taxed making lesser income. Because obviously, I'm sure a lot of you guys are probably going to make more as the years go on. So this is one very, very important vehicle that you can leverage along with a SEP IRA, solo 401k. Do some digging. All of these vehicles can help you save money and park more dollars that you would otherwise be taxed on this year. So extremely helpful and positive lifelong choice to take advantage of some of these. Number 3, defer your income, right? If you expect like a big income payment, maybe say, hey, let's push this to January and receive this January 10th. Or if some of your suppliers your customers have, some invoices that are due, maybe reach out and say, hey, I'll give you, a 5% discount if you pay in 2 weeks. Chances are they won't even bother. Like you can just have them just say, hey, pay me in like 2 weeks instead. I'm sure they'd be willing to do it. Getting paid in the following year will essentially help you stay under potential income threshold to be taxed at a higher bracket this year. So if that makes sense, if it doesn't make sense, let me know in the comments. Happy to explain. But basically with the different tax brackets, you can jump up a significant amount of fixed amount of taxes that you'll owe if you make over 180,000 versus 179,000 per year. So pretty big difference. And like if you're on the cusp of one of those thresholds where you jump from like 25% taxes to like 35%, that could be a significant amount of money that you'd otherwise be able to save. So deferring income, definitely something I would recommend taking a look at. Inventory management, you might have some inventory that you're able to write off. Say like if you're an e-com business owner, you've got 50 different boxes of inventory in some warehouse. If there's any obsolete inventory, like it's damaged or turns that might be scuffed up, something like that, you can write that off to be able to get a deduction on that cost of goods sold right there. Because if it's unusable, unsellable, you're essentially taking the loss on that. So that's another way for you to be able to write down your income at the end of the year. Number 5, establish a health savings account. This kind of gets into like the whole medical insurance. I'm not going to touch too much on this, but one of the ways that you can leverage this is make contributions towards that account, all of that is tax deductible. And if you're spending dollars on like, medical procedures or doctor visits, things like that, you can withdraw that money to pay for it and it'll be tax free. So that's another way to just continue finding different ways to reduce what you'd owe at the end of the year. Super helpful. Number 6, this doesn't get talked about a lot either. Hire family members. If you're a sole partnership, think about hiring your children or your spouse. You can actually shift your income from a higher tax bracket to a lower one, and the wages that are paid are tax deductible. So really, really solid benefit there. Say your spouse, you want to, have some VA help, you can hire her or him. There are ways to go about bringing on a family member or a child and essentially get tax deductions for it. It's honestly kind of crazy, but it really does work, and there's a way to go about it. But, a quick Google search will get you some results to essentially find the rules and walking through what's needed to make sure that you can take that deduction, because I know there's a cap on what could be tax deductible there. Number 7, take advantage of this section 179 deduction. If you know G-Wagons, right? Like any commercial vehicle over 6,000 pounds is able to take advantage of this deduction, and essentially you can accelerate the depreciation on that vehicle. Depreciation, fancy word for just saying over time, it's just worth less and less. So you drive the car off the lot every year, that car is worth 10, 15% less. So that difference, that 15%, is able to be written off as an expense essentially to your tax income, to that income that you make. So each year, if say you own a G-Wagon, 6,000 pounds, it's registered, that's the threshold, you can take a bonus deduction on that vehicle for the depreciation, which means you can accelerate the amount of dollars that you can expense, which will help write down the amount of net income that you'll make. And that net income, that final amount, is what you're taxed on. So the lower that amount, the better. So that's kind of why you see like a lot of these guys buying G-Wagons. I mean, it's a great car, but at the same time, it's for a purpose. Like they're saving dollars on taxes. Number 8, review your business structure. So, one of the things that we do with Stacks is we help and we take a look at your entity structure. So if you're a sole proprietorship, a single member LLC, all of that income, all it's doing essentially is just flowing through to your personal side, and a K1 just getting kind of slapped onto your personal return. The K1 just kind of carries all the business activity on this like separate page, and it's like stapled to your personal income return. An S Corp will essentially allow you to be treated as an employee on behalf of the business, where you can save on your self-employment tax, and that payroll expense that goes out to you as an employee is written off by the company. So things like this can really help save a significant amount of money in your tax bill each year. One of my clients, we were able to retroactively get him approved for an S Corp for this year, and we wanted to do that because he was really stepping into some money, and being able to make that change is going to literally save him over $10,000 back in his pocket that otherwise would just go to the government. And the only difference was really we had to get him set up with payroll. We had to, of course, there are some additional things that you need to manage. I'm not saying go and do this right away. You need to make sure that it's done properly, and if it even makes sense for you. But something like this can really make a big difference in the amount of dollars that you're going to end up paying. So definitely really important. Number 9, charitable contributions. Anything charitable that you're donating, if it's recognized as a 501c3, which is really just the code for a charitable organization, you can essentially write off all of those donations. And a lot of people, when they start really making good money, around like $10 million liquid, they start setting up foundations, and they'll hire, their sons, their daughters. Same exact thing with like the Trump organization, right? Who are the bosses? Who are the executive officers? They're the sons, right? That's not just because they're the sons and it's a family business. No, the compensation for an officer of a foundation, like a private foundation, that compensation is completely tax-free. So huge write-offs available there. And then just, typically on the normal side, right? I think it would apply to more people generally, but any donations that you make that are recognized, into a charitable organization, you can write that off. Lastly, tax credits, work opportunity tax credit, research and development tax credit. Just the easiest one I think that most people probably have heard of is like Tesla, right? You buy a Tesla, you can get a tax credit back from the government. So there's some red tape around it. So if you go and buy a Tesla, you get $8,000 back in a tax credit. But if you don't pay any taxes for the year, you don't just get an $8,000 credit for the next year. You actually end up losing it. So be careful with the way in which you go about looking at some of these or leveraging. I mean, ask your CPA, ask your accountant, important. Ask your tax preparer. For us at Stacks, like we maximize the amount of options available to you so that when we do a return, we're not just pencil pushing, we're not just filling out and checking boxes. We're actually looking for ways to reduce your tax liability as much as possible. So these are really the 10 biggest options that are available to you that you should really start to take a look at towards the end of this year so that you can really make sure that you're not overpaying, because nobody likes to overpay on taxes, baby. All right, last slide here, just a recap. Accelerate expenses, contribute to retirement plans, for income, inventory management, looking at health savings accounts, hiring your family members, Section 179 deductions. Remember, that's the G-Wagon expense right there. Review your business structure, charitable contributions, and lastly, tax credits, like I just mentioned with Tesla, okay? So if you're somebody that's stuck with manual bookkeeping, you're having trouble automating it, got a bookkeeper, you can barely get in contact with them. I hear this every day. It's kind of crazy that people can't literally even get in touch with their accounts. It's kind of, I don't understand it. Anyway, if you want me to manage this and more, right? All these processes do get pretty nuanced. Some you can handle for sure. I think it's very powerful for people to really understand their finances, especially if they're starting out. Do it on your own. If you feel that it's a point where, it's at a point where you're ready to outsource this to a professional, a CPA, not just a bookkeeper, okay? Bookkeeping is part of it. It's very important, but the CFO level insights that you're going to get from a CPA, it's night and day versus what a bookkeeper will give you, because a bookkeeper is focused on the backwards looking things. A CFO is there to help guide you, be a partner for you, to help you make more money. So I know you probably spend a lot of time jumping on calls, selling more inventory, finding more customers. Why not outsource it to a CPA? Stacks, we're your team, okay? We're here for you. Every month I go through a detailed report with all my clients. I'll take care of all of it for you. This includes everything we've gone over here, as well as the bookkeeping, like I mentioned, the financials. If you have multiple entities, we can handle it. We go in and automate a lot of your financial processes to reduce the amount of manual input that you have to be able to just streamline everything. We get your KPIs locked in. We get reporting on that, analysis, cash flow forecasting, looking at your profit levels. If you have payroll or you pay 1099, contractors, that process needs to get managed, and it doesn't have to be managed where you're stuck inside the business every day. Ongoing CFO level support. If you decide to sell your company, I'm a part of multiple acquisitions at this point. I've sold 3 companies. I'll actually be there for you and be a guiding hand for you to help structure it, position it, and walk you through it and help you get the best deal. We also just beefed up our team to bring on some short-term, long-term, more complicated tax strategy, trusts, estates. You've got international implications. If you want just even your year-end tax returns done, we handle all of that. So we've got 3 CPAs. There's nobody out there doing it like we are. If you want to just connect your data and your platforms to our system, that's all you got to do. Just once, and we take care of the rest. If you're interested in joining, you want to hire us, click that link below, book a call, and I'll chat with you, and I'll tell you if I think you guys are really in need of our help, or if this is still something that you actually are probably best off continuing to handle on your own. It's not every single call that I hop on that you need our services, and that's perfectly fine. But if you do want to work with us, the link's below. I hope you do, and I'll catch you on the next video. Let me know in the comments if you like this. Give this a thumbs up, subscribe, and I'll see you guys soon. Cheers.